Crude oil, WTI futures now below $42 a barrel at $41.88. A lot of news going on in oil. First, the big one, especially for someone who, when they were a kid, sat in the back seat of their grandmother's 78 Buick LeSabre in a gas line, 1980 or 81, to fill up. Bob Iacchino joins us now. He is Path Trading Partners chief strategist, going to fill us in on oil. And the United States imported just 264,000 barrels of oil per day from Saudi Arabia. It's the lowest amount of oil since 1985 on a daily basis that we've imported. Good news or bad news, Bob?
I think it's somewhat neutral news, to be honest. And by the way, we had a 72 Buick Electra 225 Limited. But it's kind of like neutral news based on the overall flow of oil in general. What had happened a few months back was China started importing a ton of oil from the U.S. The U.S. jumped up to 5th place in terms of the supplier for China. And that was more about China trying to secure a bunch of loads that were at low prices, not about the phase one trade deal like some people might think it was. It wasn't about that at all. And that actually hurt Saudi Arabia directly because Saudi Arabia has now fallen to the number 2 exporter to China. They're diverting some of these supplies from the U.S. at prices that are now $10 to $20 higher to China to try and make that up and secure market share that they used to have and they used to be pretty solid on. So it's neutral news in terms of what Saudi Arabia is doing with their oil flow. In terms of pricing, it's actually slowed down the supply of crude oil that was supposed to be coming online. Saudi Aramco announced today that they were going to slow down the reduction, or I should say the increase in production. So they've pushed that back now. So it should be solid for prices, but still, Adam, demand is the biggest thing going on here, and demand is still falling.
Bob, I know when we spoke a few weeks ago, you said you still like commodities short term. I'm curious what the case is for oil long term. I mean, the demand picture is certainly not looking positive long term, right? When you think about where things are, not just with the reopening, but overall.
So that's a great question. And I should probably point to the picture of the Chicago Board of Trade behind me and define what I mean by short and long term when I say these things. From a perspective of crude oil specifically, the front month is somewhat speculative. It's not used much for hedging by the producers and the distributors. When you're looking at the front month of crude oil, or just crude oil in general, the price action characteristics are always the same. Crude oil goes sideways for periods of time. It is a simple supply and demand asset. And that means exogenous shocks can affect supply and demand, but we don't have one of those right now. So what we have right now is crude oil moving in a channel, but it's slightly upward facing. So what I mentioned last week when I spoke to you, or the week before, whenever it was, that I'd like to purchase crude oil if it goes down, and I think that's what we're seeing right now. I think crude oil is actually going to get down into the high 39s and the low 40s, and that's probably going to be a decent spot to buy crude oil. But you're right, long term, I don't think we're going to see 90 again. I don't think we're going to see 80. We might see 70. 100 to me is off the table. Demand destruction is real, both in the aspect of people not driving as much, work from home, et cetera, as well as the shift to more green vehicles, more green forms of transportation.
Bob, thank you so much for joining us. It's Julia LaRoche here. I would like to talk about your outlook for U.S. shale. Of course, there are talks, furloughs and layoffs, and I would like to understand what the ultimate knock-on effects of that are.
Well, one of the things people used to say, Julia, is that, if prices go back up, shale will just turn the spigots back on. It's never been that simple. I've been yelling that from the rooftops. As long as shale's been a thing, you can't just turn it on. It's not a faucet. And the longer that shale wells stay idled, the more likely it is that they're permanently idled, both from a technical perspective, just that they don't work as well if they're not running, and from a capital expenditure where old wells, which tend to produce the most, that's the difference with shale and traditional wells. Shale oil produces the most output in the very beginning and then tails off very hard. What we've got is a 73% fall in rig counts just since March, 683 to about 180 last week. So I think shale oil is going to come back, but it is absolutely mortally injured. I don't think it gets anywhere near where it was even 2 years ago in terms of production.
Bob Iacchino, keeping that in mind, and also our discussion about Buicks. I remember Grammy Sweets driving her Buick like this. Her head was always below the steering wheel. Anyway, Path Trading Partners Chief Strategist, be well.